All right, so we're going to go over 6 problems here that from the fall 2022 final exam. So here we have we're allocating service departments to producing departments. We've got 2 service departments, 2 producing departments, and we want to do the direct method first. So our costs in S1 go to P1 first, and that will be in P1. We have in the producing departments, we've got a total of 90% of the usage for S1. And and so here we've got $100,000 in costs. Um, by 90. And so P1 is going to equal 40 over 90. 90 is the 40 plus the 50 together, times the 100,000 equals is 44,444. And then P2 is going to be 50 over 90 times 100,000. And is 55,556. That. So this is A, by the way. And so then we do S2, which is 80,000, and we have 55 and 25. So 55 55 divided by 80. 55 and 25 is 80. So 55 divided by 80 times 80,000. Is 55,000. And 25 divided by 80 times 80,000 be 25,000. Now we add these two together. 44 and 44, 444 plus 95 or 55 would be 99,444 goes to P1, and 25 that's 80,556 goes to P2. These two added together. Okay, and then on B, we want to allocate service department 1 first. So we do it to S2. So P1 and this one's a little bit of a trick because this adds up to more than 100, but that's okay. We can do that. S1 gets S1 is going to get 20 over 110 times 100, I'm sorry, S2 is going to get 20 over 110 times 100,000 is 1818 times 100 is 18,182. I'm going to round the 0.8 to 2. P1 is going to get 40 over 110 times 100,000 is 36,364, round that up to 4, and P2 is going to get 50 over 110 times 100,000 is 45,454. All right, now we allocate the S2. So now we're back down to this, but we add this to the 80,000. So we've got 98,182. So it'll be 55 over 80. See, now this is the same as up here, right? What's different is this becomes 98,182 instead of the 80,000. Okay. And so 55 enter. Will be 67,500, and 25 divided by 80 times 98,182 equals is 30,682. Now we add these together just like we did up here. The 3682 plus 45,454 would be 76,136 there. And for this one, we get 36,364. $103,864. And if you want to add those together to check them, get 180,000, which is our 180,000 there. All right, so that checks out. Okay, so in the problem number 22, we've got the Burkle Company processes sugarcane into 3 products during May. The joint costs of processing were $600,000. Production and sales value for the month is as follows. You determine the joint cost, allocate each product if the sales value at split off method is used. Okay, so if we use the sales value at split off, here we have to add these 3 up to get the total sales value. So that's 500,000. That. And so sales value at split off is going to be 200,000 divided by 500,000. This is for sugar. 500,000 times the 600,000. And so that's 40% or 240,000. The sugar syrup is going to be 175,000 divided by 500,000 times 600,000. Will be 210,000. And the fructose syrup is going to be 125,000 divided by 500,000. 600,000. Is 150,000. All right. Now, this problem didn't ask for it, but we have units produced, so we could also do the physical measures method. So I'm going to do that just to method. So again, we have to add these all up. 20 is 30,000. So the sugar is going to be 15,000 divided by 30,000 times the same 600,000. That's 50% or 300,000. The sugar syrup is going to be 10,000 divided by 30,000 times 600,000. And that's going to equal 1/3, right? And so that's 200,000. And then finally, the fructose syrup is going to be 5,000 divided by 30,000 times 600,000. That's 1/6 is 100,000. So we could do it that way. Now, we have separable costs here, but we don't have like sales value after, so it would be hard to do net realizable value on that one. So, but that's sales value at split off and physical measures. Okay, number 23. This would be one that comes from prior material, right? Howard Company has the following accounts balances for the quarter, March 31. Prepare a cost of goods manufactured and a cost of goods sold for the quarter. And see, we have direct materials used, so we don't have to do the direct materials. Okay, so we start with our beginning. Work in process. And that's 140,400. We add our direct materials used is 420,000. We do our direct labor. Direct labor is 480,000. Okay, then we need to do our manufacturing overhead. Okay. And so I'm going to add those all up separately here. Um, so we've got indirect materials used of 84,000. All right. Indirect manufacturing labor of 186,000. Property taxes on the manufacturing plant, that is manufacturing overhead. Okay. Salesperson's company vehicle cost, that's not a manufacturing overhead, so we can ignore that. Depreciation of the manufacturing equipment, that certainly is manufacturing overhead. 264 on that. Depreciation of office equipment, that's not manufacturing equipment. Miscellaneous plant overhead, that would be included since it's the plant. Plant utilities certainly would be included. General office expenses is not manufacturing, and marketing distribution costs is not manufacturing. So we've got all of our manufacturing overhead here. So I get 790,200. And that gives us our total manufacturing costs. And we get 1,830,600. Subtract off our ending work in process inventory, which was 171,000. And I get 1,659,600 as cost of goods manufactured. All right, so then so that's our cost of goods manufactured schedule. Then we need our cost of goods sold schedule. So we start with our beginning finished goods inventory. And so that's 540,000. Add our cost of goods manufactured, 1,659,600. Add those together. This is our goods available for sale. Subtract off our ending, not work in process, ending finished goods inventory, 510,000. And so our cost of goods sold is 689,600. The way you can look at this, another way is you started with 540,000. You decrease, so you sold 30,000 more than you manufactured, and that checks out. We sold 30,000 more than we manufactured. All right, number 24. Different management levels and Bates require varying degrees of managerial accounting information because of the need to comply with managers' requests. 4 different variances for manufacturing overhead are computed each month. The information for September overhead is as follows. So again, this is your standard costing variances, which will be on your exam. Um, okay, so calculate the variable overhead spending variance, the fixed overhead spending variance. Okay, so our um, actual variable manufacturing costs incurred was 35,600. The budgeted variable manufacturing overhead was $5 per direct labor hour. The budgeted direct manufacturing hours were 2 hours per unit, and the budgeted units. See, we need the actual units manufactured would be 34,000. Okay. So 34,000, 3,400. Oh, yeah, 3,400. Got one too many zeros there. 3,400 would be 34,000. Okay. And here we need the actual direct manufacturing hours used, 7,200 times this 5, which is this 5. And that's going to be 36,000. And so this is $400 favorable. Given that we use this many hours, we spent less than anticipated. And this, so this is our spending variance. This is 2,000 unfavorable, and this is our efficiency variance. All right, so now we go to the fixed manufacturing. The fixed manufacturing cost incurred right here is 26,000. Okay, and so we need the actual budgeted fixed manufacturing overhead of 20,000. And so this is going to be 6,000 unfavorable. This is our spending variance. And then we need the budgeted output units was 2,000, or 3,200, 200. So we need the amount allocated. And times 32,000. So this is going to be our budget times 34,000. The actual 34. So we need the 20,000 divided by 3,400 or 3,200. is $6.25 per unit. And that will be $21,250. And so this is our production volume variance, and it is 1,250 favorable because we budgeted 3,200, but we made 3,400. Okay, and so this is how much we allocated. All right. So you will see standard costing on your final. Prepare a production budget. You'll have something from budgeting on this. There are 30,000 units at the beginning of June. Plans are to have inventory of basic goods equals 5 pounds of materials. Prepare production budgets for July. So we don't have materials purchase. I'm going to go ahead and do a materials purchases budget anyway, but they're just asking for the production budget. So we've got June, July, August, and if I'm going to do the material purchases budget, I need 2 months after. So September and I need July, August, and September, so I don't need June here. July, August, September, so I'll need October and November. Okay, so July, I've got 120,000, August, 210,000, September, 150,000, and October, 180,000, and 120,000. This is our production or our sales. Now we need the ending inventory. Plans are to have inventory of finished products that equal 20% of sales for next month. So that will be 42,000, 30,000, 20% of 150, 36,000, 20% of 180, and 24,000, 20% of 120. Now, July, we have 24,000 as the beginning inventory, right? 20% of 120. We can just shift this down. Already did the math. Okay, so 162 minus 24, 138,000. This will be our production. 198,000, 156,000. 168,000. Okay, that's our production. Okay, now that we have that, we can do the material purchases. So July, August, September, and October. Um, 5 pounds of material, so I need to convert that to pounds of material. $690,000. $990,000. $840,000. Okay. And so they're equal to 30% of the needs for next month. So 30% of 990 is 297,000. $234,000, 30% of 780, and 30% of 840,000 is 252,000. Okay, so we can shift these down. 297 and 234. Now I need 30% of 690. That will have in inventory the beginning of July. Planned. Okay, so now we just add these all up. So this is the pounds I need to buy. 780 in July. $927 in August. And 798 in September. All right. So that's the pounds I need to buy. And then finally, each pound costs $8. $6,384,000. $7,416,000. And $6,240,000. So that would be the dollar value, our purchases on that. Okay. And then finally, the last problem in this exam, you're going to see cash collections budget. This is one you'll probably see. Cash is collected from customers in the following manner: month of sale, and they get a 2% cash discount. Month following sale, 50%. 2 months. Okay. Okay, so cash collections. All right. So what for the fourth quarter? So the fourth quarter is October, November, December. And we get the month of sale. So that would be October. The month following sale, August, no, September. And 2 months following sale, that would be August. So we don't have to go back to July. We just have to go to August, September, October, November, and December. Okay. All right. So August, we sold 34,000, and we're going to collect 15%. And so in August or in October, we will collect 15%, which is 5,100. November and December, we don't collect anything from August. And then in September, we sold 38,000. We're going to collect 50% the month following sale, so that's going to be 19,000 in October, and 15%, 5,700 in November. Nothing will be collected in December. Then October, we have 42,000. Okay, so 30% would be 12,600, but there's a 2% discount, so we multiply that by 0.98. So October, we get 12,348. October is 42,000, so in November, and we collect 50%, so that's going to be 21,000 in November. And in December, it's going to be 15%, is 6,300. Okay. Then we will collect none of November's sales in October, but we sell 48,000 and we collect 30%, but we give a 2% discount. Whoops. 48,000, 30% will be 14,112. And then the month following sale, 48%, we collect 50% is 24,000 there. In December, from December sales, we collect none in October. We collect none in November, but we sell 60,000. We collect 30%, but we give a 2% discount. Is 17,640. So now we just add these up. We anticipate collecting 47,940 in December. 40,812 in November. Oops, that didn't look right. There we go. $36,448 in October. All right, so we also have purchases. So let's do the purchases in the fourth quarter. Same basic. Again, this question didn't ask for it, but the information's there, so let's go ahead and do it. So we got October, November, and December. Here, 40% are paid for cash in the month of purchase. There's no indication we get a purchase discount. And the balance is paid in the following month. So we need September. We don't need August, October, November, and December. Okay, so September, we had 14,000, and we're going to pay 60% of that is 8,400. Not going to pay for any of September and November, December. In October, we bought 16,000. 40% of that is 6,400 in October, and that'll be 9,600 in November. In November, we bought 18,000. So 7,200, and it'll be 10,800 in December. And then December, we bought 20,000, and we will pay 40% of that. It should be 8,000, and it is. And we just add those up. 18,800 will be paid in December. 16,800 will be paid in November, and 14,800 will be paid in October. Excuse me. All right, so that concludes